Welcome back once more. Today we'll be looking at market structure. This topic is a very important topic because from here we are gravitating into the strategy, what we look at in the market before we place a buy or a sell. And so the markets, we have three types of market structure. If you look at the chart, you'll see that the chart is represented in waves. It's not just a straight move, it's represented in waves and in patterns. And so these are known as structures. We have three types of structures, market structures. We have the bullish market structure, and bullish market structure is when you see something, a pattern like this, it move, you make another high, you come back, make another high, come down and make another high. When you see something like this, you know this is a bullish market structure. How do you know a bullish market structure? We have some characteristics. One, a bullish market structure makes higher high and higher low, higher high, higher low, higher high, higher low. So that's what a bullish market structure does. Another one again, a bullish market structure breaks its highs and protects its lows. You can see as it's moving, this is where it started from. The low is protected. It came back and it did not take out this low. It keeps breaking its highs. So this is what a bullish market structure is all about. And so we also have what we call the bearish market structure. In the very bearish market structure, you will see it makes higher low, lower low, higher low, lower low, higher low, lower low. So that's what a bearish market structure does. In a bearish market structure, you see that its high is protected. Look at this. When this price started moving, this side price never came back to this high again, but rather it will make a retracement, come back close to the high and break the low. So it keeps breaking each low while protecting the highs. Then we'll have what we call the consolidating market structure. Price makes equal high, equal low, equal high, equal low, equal high, equal low. In this market structure, this is a market structure that should not be traded. Traders tend to lose a lot of money in this market structure. And so you find out that if you are selling here, before you said I'm selling, you started buying, you lose money. But you make money in trading the bullish market structure, which is the buy market, and the bearish market structure, which is the sell market. I want us to just go to the chart straight. Okay, this is USD CHF charts. This is 4 hours. Let's look at this place. From here, from this place, this market is on a sell. You can see on this market, you can see I spotted at this place. What you just saw now here is a consolidating market, and the market is just going up, down, up, down, up, down. This is a consolidating market until price came and take out this low. It now shows that okay, it's going down. So this is a consolidating market. When you see the price moving in this range, you stay out. So now let's look at the structure we are seeing after the range. First, this was the last break of structure here. I have a glitch in my network, so it's somehow slow. This is the last break of structure to the downside. When you see BOS means break of structure. Price came back, took this high out. Now when you're marking out your break of structure, ensure that the tip of the candle close body to the next candle. The wicks is not calculated. If you are marking wicks to wicks, as in 2 weeks, is not right. the tip of the candle should close bodily with the next candle. So you see something like this. This is the tip of the candle. Let's expand very well so that you can see it. It's closing above the body of this candle. So here we have a change of character. What is a change of character? A change of character, we call it church. We change of character means that this market was selling and price came. This is the last block of structure. When the last block of structure was taken out, remember we said in the bullish market is supposed to break its highs and protect its lows. But now in the bearish market, price is supposed to protect its highs and break its low. Now this is a bearish market. Price came and take out this high. So it shows that it signifies that the direction of the market is changing. And so this is called a change of character. And so when you see a change of character means that this market that was selling is changing direction. It means that it's starting, it's going to buy. It's not going to, because if it's going to sell, it's supposed to protect this high. It's not supposed to break this high. But now that this high is broken, then there is what we call, this is what we call a change of character. And so, change of character, after the change of character, price came, it came back to this zone. I have a glitch in my network. The network today is somehow, price came here, and what's happened again? This high was broken. This is another break of structure. So after that, price came back, did another break of structure, keep making higher highs, higher lows. This is another break of structure. When this break of structure occurred, price came back to this fair value gap. It came back to this place and continue the move up. Here's another break of structure. You know, this 4 hours time frame. You can mark a break of structure in any time frame, weekly, daily, monthly, 15 minutes, 10 minutes. You can mark any based on the kind of trader you are. And so you can see this is the last break of structure. And now for this days, it's an equal high. And so the next thing we saw again was this low. Ever from this movement, we notice something. The price is just moving to tinting to the upside. After this last move that this high was taken out, price kept tinting to the upside. It will come make a little retracements and push again to the upside. So it kept breaking its highs. And now this is the last high that was broken, and this is the low that led to that high. And so price came now on this place. Price came this place and took out this low. And that was another change of character. That's a change of character telling us that this market now is going to change direction. And so what we should be looking at for now is for price to make another retracement and position. So this is this is what market structure is. And inside this, when you go to, you know, this is 4 hours time frame. Inside this, you go to, if you go for example now to 1 hour time frame, you'll see that there are still structures inside that need to be marked out. Inside this structure that we are marking, it's very important to take note of them, mark them so that by the time you start placing a buy or a sell trade, you will be able to know when there is a significant change. Now, inside this place, when on these 4 hours, when there was a change of character, price pushed down and came to the zone. When this was the last break of structure to the sell that it is saying, when it tapped on that zone, then this is the last break of structure to the downside. Price came to this last break of structure, it took it out. When it took it out, is a sign that this sell that they are selling is ending. It's not going to sell again. And look at what happened. That's the change of character. When this high was taken out, it's a sign that they are not going to sell again, that they are going to buy. And what happened? Price did the retracement, it protected the low. In a buying market, in its low is protected, it protected the low. And that was how it started pushing up. Now, this was a high that was calculated on the 4 hours, but inside are still market structure on a lower time frame, on 1 hour time frame. So mark it out so that you will train your eyes to know structure. Mark everything out, mark them out. Price started breaking structure to the upside. Started breaking structure to the upside. You can see this is exactly what is going on. My network is somewhat lagging. Yeah, because you can find structure inside structure, break of structure to the upside. This is another break of structure here. Break of structure to the upside. This is inside our 4 hours time frame. You mark out the structures that you're seeing. Then after here, this base was taken out. It showed it has change of character, although this overall low was still protected. It started tilting to the downside. Just mark out what you're seeing so that you'll be able to read it. Yours is just to train your eyes to know this. Price came again, break the low, mark it out. Whenever you see that a high has been taken out, there you know that is a bullish move. You see, break of structure, mark it out because anyone you're seeing it looks small. This is the last break of structure. Mark it out, no matter how small it is. Don't ignore it because it will tell you something. It's a story. Now, price came and take out this eye. This is this eye. Price took it. That was a change of character. It was a change of character. And from there, we started seeing the structure to the upside. This is the break structure. The break structure. This is the break structure. Mark it out. Mark everything out. This is a break structure. Inside structure are other structure. This is a break structure. And so you can just do like that and just mark it out. Just mark out. This is what structure, when you have been able to train your eyes to marking out structure, it will be easy for you to, when you come to any market, you see any chart, all you just need to do is mark out the structure. You will be able to understand the direction of price because market structure helps you to uh, know the direction of market, the trend of the market. And so just like here is saying that the trend is your friend. So you don't go against the trend. You get against the trend, you may lose money. So, but when you trade in line with the trend, you may be 50, 60% correct. So trading in line with the trend will be is it's all to your advantage. So when you mark out the structure, it will guide you to know the direction of the market, the trend of the market, and you take decision based on that. So I want you to go back in your own, look, watch this video over and over again. Guys, don't play with this video. Watch it over and over again. Mark, go to your own charts, mark out your market structure. See if you're getting it correctly. If there is any part that you need answer, feel free, come to my comment section, ask the question. I'll be glad to answer you. So this is what we'll be covering today. You find this content insightful, I would like you to please hit the subscribe button, like, and also share to your friends so that you'll be notified whenever any content is. See you in the next video. God bless you.